Hello everyone, welcome back to the channel again. Before we jump in, a quick reminder that I am not a SEBI-registered analyst and none of the stocks, sectors or market views discussed in this video should be taken as any financial advice. In this video, we are going to cover top performing sectors and stocks, upcoming market moves and also some of our major watch list and bigger picture in and around what is happening with the market. With that being said, let's now jump into the charts. So first of all, let's look into all the major indexes that we have. Let's first look into Nifty, Bank Nifty and Nifty Private, and then later comes to PSU banks. So if you look at Nifty Bank or Nifty Index for that matter, they all are doing some sort of consolidation. So this is clearly within a range. So it tried to do a breakout on 24,500, but then it couldn't sustain and then it just retraced back to the consolidation range, and it's been a while that's trade between 24,500 and 23,100. So it's clearly in this range. If you look at Nifty Bank, that is also in range between 58,700 and 55,900. So these are just trading within this range only when it breaks either 58,700 or 55,900. Only then it will make a impulse move just like this or just like this. So until then it's like a no trade zone and it's going to just swing up and then come down. So there is no point in taking trade in between. So trading opportunity lies either at this support area, where if it takes support we'll get that move, and later if it breaks out then we'll get a really good up move from here to here. If not, if it breaks at this point, in case if we are entering at this level, we'll just exit by keeping a stop loss just below recent support, right? So Nifty and Bank Nifty and Private Bank, PSU Bank, all are in a range and they're not going to make any big movement unless it breaks these upside and lower side levels, right? So that is what it is, and the same goes for Nifty Finance. Now let's look at some of the major movers, major hot sectors that happened in past few weeks, right? So firstly, it's pharma and healthcare. These are shoot up a lot in recent few weeks. If you look at the trend from April, it moved up around 50 percentage. Be it pharma or be it healthcare, they are somewhat similar related to the same segment. They really moved up a lot, and then there is no point in making an entry from here or something like that. So what we have to do is, these sectors need to cool down. They need to come down a little bit in order to carry more bulls for its next up move. So we'll simply wait for that move. If that never came and then we'll never make an entry, that's totally fine, but let it cool down a little bit. Do not make entry on a hot sector. Just wait for it to cool down, let it get less attention, and that is when we have to make an entry. So pharma, healthcare, Nifty EV or something like auto, these all moved quite a bit in recent time, but it's not always necessary for us to wait for the stocks or sectors to cool down. Nifty Realty is an example. If you look at Nifty Realty index, it moved up a lot, like pharma or healthcare or auto or EV, but it's still not ready to cool down. If you see, it's still ready to make its next move by making new highs, right? So here in reality, if you look at the reality stock index, it's clearly a trend line breakout, and after that it's again consolidating, and then this is again like a flag breakout. So what happens for some sectors, some stocks, is it will never cool down. It will make new highs and it will create new structures at the top level, and then it will make its up move. So Nifty Reality is kind of building the same thing. After a breakout at this level, it's still consolidating, indicating that it might go up after breaking out this level. So considering this 826 as the support level, if it managed to stay above 826, then we can expect new bulls at any time, and then it might make it next move, right? Apart from these sectors, we also have sugar sector, jewelry sector, logistics sectors. These also shoot up a lot in the recent past. If you look at some of the sectors like sugar, if we just look at their stock, we don't have a dedicated index for sugar, but if you look at the stocks in this sector like Dalmia sugar or Awadh sugar or something like Dampur sugar, we can clearly see the spike that happened in very last few weeks, right? Within this month, I would say within this month most of the stocks have shoot up from 40-50 percentage from its low point. So these sectors also needs to cool down. This is definitely not the right time to make an entry. I was lucky to get in some of these sectors at an entry at this point, but yeah, I would definitely wait for that to come down and again make my next entry. So that is about sugar. If you look at something like jewelry stock, here also we can see the same thing. Kalyan Jewellers almost spiked like 50-60 percentage. Beat any gold stocks, all of them did the same. If you look at some Aegis Logistics or Alcaco Logistics, these are all not all the stocks in this sector is moving out. There are like specific stocks like Aegis. So Aegis is something that trades gas business. It's just transport gas from one place to another. And then you have Alcargo. These are all specific logistics, not the general logistics companies like Delivery, which is actually everyone is familiar of. Delivery or Blue Dart or TCI. These are all companies that delivers or it is just transporting your parcel or my parcel or other businesses parcel from one place to another places. So these are not moving out, but specific logistic companies like Aegis that transport gas and all are moving up. So one segment of logistics is moving, eventually part of logistics will also move up. So that is why we have to keep other logistic companies also in our watches. So it's just that. Now let's look into the stock specific activity. So the first one in this list is Senco. This is again comes under jewelry stock, right? And then if you look at the chart, it actually did a breakout here and then it moved up quite. It made a move because of the jewelry bull run, and then it came down to the same levels, to the same breakout level. So this is the time where you will have very less risk. If you look at the risk level, it's just 5%, but again if it managed to carry more bulls, it can make 429 430 level again. So that is one stock. Another one is Jacob Pepper. Jacob Pepper is doing it's building quite a good structure. It's almost like a triangle breakout, and once it's managed to stand above this particular level, it can reach something like 500 or 560 plus. So again, one more jewelry stacker on radar, same like Senco. This is also building a really good structure. We're not sure if it's managed to break something like 11. It's a penny stock, but if it managed to break that 11, then you can see something like 13 or 14. Again for CDSL, it's making a good structure, but it's not necessary to break this particular level. It may trade here and then it may face rejection, and again it may pull back to something like 1285, but as long as it stays about 1285, it's going to break this particular level. So if it retrades, it's just going to come back and then bring up more bulls, and then it just go up, right? So we don't know what will happen, but just wait and see if it comes back to this level, and that's the best level to buy. And next one is something like Tembo Global. This one is also comes under metal stocks. Now if you look at the chart, what's happening is it did a breakout, but it couldn't sustain with this one single candle. Even though we have enough volume, buyers are not ready to fight the sellers, and they are just coming down to bring up more buys, right? So once if the support pickups and if more buys comes up, then you can see something like 80 or 86. Next one is Avanti Feeds. Again, same, like all my setups are similar. It just coming back to the same support area where it previously had a good breakout. If you look at this Avanti Feeds also, you have seen the breakout here and then the up movement here, and then it comes back to the same area where you will get fresh buys. So this is the time where you need to watch out this particular scene, this particular area, and see how the price reacts at this level and see if the price goes up or not. Next is veto, and then veto is something that is also trying to make a breakout, but it's failed to sustain this breakout and then came down to same level. And let's see if it's managed to stay above this particular level. Something like if it managed to stay about 116, then you can probably see a good breakout and something like 250. That's almost double the price. And next is CESC. Again, none of these are any kind of recommendation for buy or sell. It's purely my own idea and my own observation and my own trades. It's not any recommendation for anyone. And then something like CESC, Tata Power, these are also comes under the same demand area where it previously started.